you so much, Harish. Pleasure to be here.
Fantastic. So, Farooq, Julian, and Jonathan, welcome to the webinar, and thank you so much again for joining. So, I've sort of divided the content of my questions in a few buckets. So, let's first start speaking about some of the trends in fraud that we're seeing. So, Farooq, if I may come to you first, from a banking perspective, what are the most significant shifts that you're seeing in fraud typologies currently, particularly in relation to scam-led transactions and mule account activity?
Yeah, thanks, Shirish. So before I start, it's important to lay the background. So India is presently the third largest digital economy in the world, followed by, only after US and China. So what has happened in the last 10 years? There has been a lot of drive towards digitization and financial inclusion in India. So we have 85% of our population which is presently covered under financial inclusion. And this has improved significantly over the last decade. We have around 56 crores Jandan or no frill accounts which are presently open in the banking system. We also have the world's largest biometric digital identity, which is called Aadhaar, which is helping in driving this real-time payments and customer onboarding digitally. Plus, if you look at the subscriber base of mobile and internet banking, 85% of the households have a smartphone, and you have almost 97 crores or around 970 million people who have internet access. So what has happened in this landscape? When you look at the trends, you have moved from a cash-led frauds to digital frauds. So everything has gone digital. Today, a bank account can be opened with a mobile phone and a SIM, and of course, one of the 6 OVDs. So the entire journey is digitalized. Now, what has happened is in this backdrop, while financial inclusion and digitization have picked up, digital literacy, especially in tier 2, tier 3 cities, has not kept pace with this, and it is still low. So, what has happened is this has created vulnerability in the system, and this is being exploited by the cyber criminals. So, they are primarily targeting two segments of population. One is people who are new to the digital landscape. And so you have your senior citizens, which are vulnerable here. And the second segment are those people who are looking out for an income, additional income. So you have your profiles like student, housewives, or you have lower income groups. So the trend presently in India, you have almost 70 to 75% of digital frauds happening in investment scams. And we are seeing a shift from the simple easy money scams to more sophisticated industrialized operations. And as per government intelligence, this is being driven by Chinese gangsters operating primarily from Southeast Asia, Middle East, and African countries. Uh, so you have your AI powered phishing attacks, you have deep fake videos, but as I said, you have digital arrest. But investment scams is something which has picked up, and the money is moved using UPI, which is a real time payment engine. So we have almost 60 billion transactions processed through UPI. It's a vast ocean. So while these trends have moved over time, the underlying theme remains the same, in my view, which is exploiting human emotions of fear, greed, and emergency or urgent payments. So fear, you have your digital arrest. They scare you by calling you that you are in trouble. Greed is, of course, your investment scams, your lotteries, you have won something, you have got a lucrative job. So people are gullible, they fall for this. Awareness is low. And of course, emergency, somebody in the family is in trouble, etc. So I think these are good social engineering tactics. Good means they are, of course, malicious, but they are very, creative. And it is like, saying in a common layman's language, when you say April Fool banaya, or you made a April Fool of yourself, there is no end to creativity. You can pull any prank. Just think about it, digital arrest. So for a common man, he knows everything is digital. So now he's under digital arrest. So he connects with it, unfortunately, and he gets scammed. So this is what I would summarize briefly.
Right, right. Thanks for that opening, Farooq. So, Julian, coming to you, again, how do you see fraud trends or fraud schemes evolving from the virtual asset perspective?
Yeah, it's a really good. I think Farooq, touched on some really important points that we're also observing, and this is really just the global expansion of scam centers. So the industrialization of fraud that these scam centers have introduced to operate on such a large scale, with the professional actors now running, really creative but also very technically sophisticated and complex capabilities. And these scam centers primarily were run out of Southeast Asia. But now we're seeing it also then expand into the Middle East and into Africa. And much of this driven by human trafficking, so victims involved in those scam centers within themselves. And from a virtual asset standpoint, this is particularly interesting because we're very borderless in nature in terms of the movement of assets. So we see, and we can touch on this a bit more in terms of the types of scams that we're seeing. But the increased use of agentic AI in the last 12 months in particular has really enabled scammers that before needed a level of sophistication, more entrants to move into the fraud arena and to participate in this activity. And so these solutions are now being offered on marketplaces for people to kind of buy fraud as a service software and to operate that at scale. And it takes much less technical knowledge. So it's now non-technical actors can get access to very technical skill sets and tools, and a level of autonomy in those tools. So those tools will run probes, they'll run checks, they'll test, where are the weaknesses and vulnerabilities before they can then expand on those. And this is moving from just your typical mule account activity. I think as Farooq touched on, the investment scams are just is huge at the moment. Business email compromise, etc. So there's just the breadth of fraud that is now taking place has expanded dramatically. And what's particularly interesting for us is it's become to such a point where we're now seeing the US and the UK applying sanctions to actors that are operating and facilitating this scale of fraud. And that speaks volumes because once it becomes a geopolitical issue that reflects the use of sanctions, now from a business standpoint, we're not only dealing with fraud and money laundering, but we're also dealing potentially with a sanctions nexus as well. So that's changing the dynamic from a compliance standpoint and how you manage this in particular. And just the last one, I think, is probably the challenge of recovery of funds for victims. So funds are moving very quickly. Often, fraud may be perpetrated outside of the virtual asset environment and move into the virtual asset environment, or vice versa, start in virtual asset and move off into the traditional finance via banking rails. And just the recovery of assets across borders is really, really challenging for victims, which then it encourages fraud networks to keep operating, because if there's less likelihood of recovery, then that's an encouragement for them to continue their actions. So I think these are sort of the high level observations that we're making from a virtual asset standpoint.
Oh, thanks, Julian. Jonathan, coming to you now, what are the key shifts that you are seeing in fraud patterns, right? Because you deal with so many customers around the world, especially in relation to scam-led transactions or mule account activity. And how do you see these getting reflected in transaction data?
Right. I think this is a great question, Sirish, because one of the things that we, in the industry keep telling is, the criminal is always ahead. The criminal is always using newer technology, newer methodologies, newer types of mechanisms, and the industry is always catching up to what these guys are doing. So there's a massive shift that is happening. I mean, if we go back, I mean, maybe a decade and look at the kind of frauds that were happening and also the focus that banks and financial institutions were having globally, it was more on corporate fraud. It was more on, individuals or entities picking up loans and then defaulting on loans and picking up loans for the wrong reasons and wrong KYC documentation. I think those days are well behind us, and the focus now has shifted so drastically to fraud is because the individual at financial institutions is getting affected. You have vulnerable customers like senior citizens. You have vulnerable customers like customers who've just come out of the hospital, who've probably been in the hospital for a while and are now back in the house and are trying to carry out their banking activity, and they become very vulnerable. So criminals technically are leveraging AI. AI is what they are using. So for financial institutions like us, it is imperative that we have AI-driven systems in place, because like Mr. Farooq also mentioned, fraud as a SaaS is something that organized groups are doing. They are selling pre-built scam scripts. They are selling stolen identity databases. So the various kinds of methodologies that are being used is now all reflecting into the transaction data. Now, how good is our transaction data becomes key here. For us we may have the best transaction monitoring systems, we may have the best fraud detection and management systems, but unless the data itself is clean and the data itself is well known to the financial institution, it becomes a challenge. And false positive obviously is a major challenge that a lot of financial institutions are facing today. And the bigger challenge is, how do you identify this in real time and stop it in real time? So these are the kind of challenges that we are seeing when it comes specifically to transaction data. Sometimes it becomes a bit of a challenge to understand if a transaction is actually fraud driven or if it is actually clean. Like Julian also mentioned, there are biometrics and things like that, where multiple different types of technology is being used to basically cover what it is that the criminals want to do, and it is pretty easy for victims to fall prey to these kind of attacks. So I think having a focus on clean data, because at the end of the day, I've always kept saying this, garbage in is garbage out. So having good transaction data, understanding your transaction data and collating your transaction data from multiple sources becomes key here. And once we have that view, I think that will really help us to look at transaction data with more intelligence. I think those are my 2 cents on the matter.
Sure. Thanks, John. Thanks. Okay, so that was a bit about the trends that we're seeing. I thought we should speak a bit about the risk identification side as well. And Julian, coming to you, I thought let's speak about the intersection of traditional finance or traditional banking and crypto. Although nowadays crypto is also no longer new; it's been around for some time, and but I think in the overall scheme of things, it is possibly still quite new. So, Julian, what would you say are the key risks that the traditional banks or financial institutions should be aware of when it comes to the intersection of these traditional fraud schemes and the virtual asset ecosystem? Also, there is often a perception that crypto increases anonymity in financial crime. So, is that true or not? And the third part to my very long question is, how accurate is this perception? Okay, what capabilities actually exist today to trace and investigate illicit flows, particularly given the speed and cross-border nature of these transactions in virtual assets?
No, that sounds good, Shirish, and I think it's great to address this. What's quite different now to sort of 5 years when I first started in the crypto industry is that traditional finance, so many banks, major institutions are now actually actively exploring a crypto offering themselves. So there's two components to this. It's what are the fraud risks associated with having a product offering yourself to service your customers, whether it's offering a stablecoin service to try and facilitate faster cross-border payments, etc., or exposure to the crypto ecosystem more broadly. And then the second part to that is, as we've seen a growing merger between the crypto ecosystem and traditional banking, we're seeing more banks actually bank virtual exchanges, for example, banking more players within the crypto ecosystem, right? So there's two components to this: is whether you are offering that service or whether you're actually banking a customer who is offering that service themselves. Primarily, if you're offering that service to those customers, then it's typically for fiat on and off ramping as probably the biggest risk component for us to consider for today. But I think it also applies if you're offering that crypto services to your own customers yourself. There's two aspects that we look at this purely from an exchange standpoint, and this is fraud that's happening outside of the crypto ecosystem, and then it's merging through into the crypto world via that fiat on and off ramping. And so, or it may be a fraud that's being perpetrated outside of the crypto ecosystem, but the payment mechanism is via crypto itself, right? So there's two parts to that interplay, but as to how that fraud can then move into the crypto ecosystem. The second one is fraud occurring within the ecosystem itself, within the crypto ecosystem themselves. So these are scam coins projects or coins that are launched. There are many millions of tokens now listed that are publicly available, and so just people being victims within the ecosystem themselves, and to how do you kind of manage that risk associated with it as well. For financial institutions that are traditional financial institutions that are banking crypto exchanges or wallet providers or payment providers, etc., it's really about understanding the framework that they have in place and the technologies they have in place, and then their risk appetite around managing that risk, and then who's owning the fraud risk in those services. Is that sitting with the exchange, or is that sitting with the traditional finance, with the bank itself? And then how are you then monitoring and managing that on an ongoing basis? So that relationship has to be really close. There has to be really clear lines of communication and an element of trust as to what's an acceptable level of activity and what's not. I think because we just have to remember that often the fraud networks that we see are looking to off-ramp their proceeds of crime into traditional banking, into fiat, so then they can spend that more widely than what is available within the crypto ecosystem. Some of them may want to keep it within the ecosystem, but some will very often will want to off-ramp, and that's that off-ramping component is where the risk really is the pointy end of what's happening. From a downstream consequence, we're seeing more mule networks setting up and preparing for fraud activity. So they may go ahead and set up lots and lots of accounts across many exchanges, across many platforms, and then look to exploit those when they're ready, and then move those assets very quickly. One of the challenges is probably the movement of assets and how quickly they can move. So they can originate in one form, whether it's on one blockchain or in one token form, and then can move across to other blockchains and then change into another token form. Much of that is traceable on chain. So as we've talked about many times, a lot of it, there is a footprint that is an immutable footprint that exists on chain. And so on-chain capabilities have really improved dramatically in the last 5 years and are continuing to add over time those capabilities. So when it comes to anonymity, I think the third part of your question, that anonymity element, there is still that perception that crypto is anonymous, it can't be traced. We would say that's not factually accurate. It's dependent on the circumstances, though, and the situation. And so quite often it is traceable to a point. What's the challenge for fraud investigations, though, is that often that's moving to an exchange or a wallet or a payment provider that's overseas in another jurisdiction. And then you run straight into that jurisdictional challenge of investigators knowing how do you reach out to those exchanges? How do you get that information? How do you engage law enforcement locally to get them to start doing that tracing process and to start trying to trace those funds? The other one is just, so most blockchains will have an element of traceability to them. That traceability can be done in real time. So you can have very real time as an exchange, real time monitoring of funds being sent to a wallet that's known to be associated with fraud. Are you receiving funds that's known to be associated with a fraud or a scam? So that real time component is quite unique in crypto that you don't necessarily get in traditional finance, both whether it's coming directly or whether it's coming indirectly via other hops before it gets to your exchange. Similarly for irreversibility of funds. So, one of the other challenges is really around the irreversibility of funds once they have left. So if you're a traditional bank and you're servicing a crypto ecosystem player, then once funds have moved off that exchange or off that platform and moved into another element of the ecosystem, then that's going to be challenging to kind of get those funds reversed back. It doesn't work like it does in traditional finance, where you can have them reversed. Now, there is exceptions to that. So the likes of Tether or Circle do actually have the capability to freeze assets on chain. So we have seen this. We've seen Tether go ahead and freeze wallets that are containing assets. We've seen Circle freeze assets as well under certain circumstances, and they can do that very quickly. And so there is that element that is starting to change, where there is an ability and a willingness to freeze those assets on chain and then monitor those on an ongoing basis. And then the last one is just one of the other kind of risks that to be aware of is a preference for certain assets. So it's widely acknowledged that Tether or USDT on the Tron network is the preferred mechanism for funds to move within the crypto ecosystem, largely because of the low costs, very low cost to move assets, the speed at which it can be moved, and the speed at which there's settlement, and also then the liquidity within that network. So the ability to exchange large amounts as needed. So they're just some of the kind of risks for them to be aware of. The last one I'll just touch on is the regulatory and the licensing frameworks that are coming into effect across the globe have rapidly improved in the last sort of 4 or 5 years. And so that's now holding exchanges and participants to a higher standard than they were many years ago when crypto was sort of that new technology. And so that is also helping and will help guide traditional finance to understand what are the standards that are being applied or adopted by those participants that are pursuing that licensing frameworks.
Thanks, Julian, for that very exhaustive description, and I think that's going to be very useful to our participants to get a deeper understanding. Farooq, coming back to you, again on the risk identification side, money mule accounts, as you also mentioned, they continue to be a key enabler of fraud. What challenges would a regular bank face in detecting mule activity early, especially at the onboarding stage if possible, but definitely at the transaction monitoring stage?
Yeah. So Shirish, I was actually looking at some of the questions which were asked in our panel. So I think one question was about the mule itself. How is internationally a mule defined? I'll spend a minute here. So intent is not the criteria, because the question was asked whether intent is a criteria. So you can have a witting mule as well as an unwitting mule. So if a person is an accomplice in a crime, let's say I want to do a fraud and I want to cheat the public, and suppose my colleague agrees to lend his account to me to move the funds, he is involving himself as a witting accomplice. So that of course is a crime. But sometimes these accounts are also sold in the open market. So I talked about the lower income groups. I talked about 56 crore Jandan accounts or no frill accounts in the Indian context. So these are very low value accounts, and poor people, they are willing to, allow money to be moved through their accounts for a small commission. So they do not know the risk, but they are just looking at the commission and lending their accounts or selling their accounts. So intent or knowledge is not a criteria for a money mule. A money mule is a vehicle through which fraud money is moved across and layered. So that is the answer to that question. Another question which came up was on the use of AI, ML, etc. in transaction monitoring systems, how we can actually prevent. So I'll come to it in a minute. So to answer your question, Shirish, what are the challenges banks face in identifying these mule accounts at an onboarding and at transaction monitoring stage? So I talked about the digital onboarding in the digital landscape. So digital onboarding is a thriving ground for money mules, and almost 70 to 80% of the mule activity thrives there because you don't have to visit the branch. You are away in your own safe room. Um, I don't know whether people know, but in India, if you have the Aadhaar, which is your biometric digital identity, you can officially get 9 SIM cards on the same Aadhaar. Just think, nine different SIM cards, 9 different numbers. This is restricted to 6 in some northeastern states, etc. But still, the number is large. So, I think the challenge which has accentuated, because while banks and institutions have offered digital onboarding, and of course, it is required because we, of course, are a digital economy, onboarding digital controls have not compensated the risk. So today you're opening up your landscape and allowing the general public to open accounts in a non-face-to-face way. But have you built your online controls to prevent the risk which you are opening up to? So for example, are you having controls like SIM and device binding? Are you having controls to verify Aadhaar and PAN linkages? Are you monitoring how many accounts are opened using the same mobile number? Are you limiting that? Are you adding controls like frequent changes in your email or mobile IDs after opening the account? Are you doing due diligence before offering a bulk payout transfer facility online? Are you doing due diligence before creating virtual payment accounts, VPS? So, these are traditionally being used to abuse the system. So I think the first gap is banks should look at the digital workflow onboarding journey and see whether they have mitigating controls built to minimize this activity. You won't be able to avoid it, but you can minimize it. That is point number one. Secondly, the expectation of regulators is that banks and financial institutions have to do more than just KYC compliance. KYC compliance is you take your one of the 6 OVDs in India, you confirm it is the same person, and you open the account. So obviously that is the basic thing required. But there is an expectation to do more than that. And that more than that requires application of technology. It also requires a human-led intelligence, because in many places, many banks, people somehow feel that if you have the technology, if you have AI ML, you will be able to prevent mules. No, it is not that. I'm afraid to say it requires human intelligence. So in India, we have a lot of initiatives taken by the government, including the Ministry of Home Affairs. They have the National Cybercrime Reporting Portal, I4C, etc., and they actually share the suspect registry or the list of mobile numbers which are found to be involved in this activity with banks. There is a API integration with NCRP. There is also a fraud risk indicator from the Department of Telecommunications. So various tools are available, but so far their usage or the online integration of banks with these APIs have not been, done by many banks. So this is a way you can actually do the checks against the negative list or the mobile numbers known to be involved in fraudulent activity at the time of onboarding itself. But we are still not there across the system. So on the NCRP portal, there are around 1200 odd institutions. Not many have done this API integration so far, which is being pushed by the government and RBI, etc. Again, we are talking only of digital onboarding. We also have to keep in mind that accounts are sold. So you can have your existing customer base, which is certainly an inactive account or a dormant account, certainly coming to life with a lot of movements happening. So that is also one challenge. So you cannot find that at the time of onboarding. It comes through transaction monitoring. Now, Jonathan touched upon a good point of false positives. So typically, when we look at this mule activity, we see UPI or similar real-time payments being used to move money fast. The average age of a mule account is decreasing day by day. So they are like fly-by-night operators. They open the account, within 30 days, they do their dirty work and they disappear. So, uh, the challenge in monitoring is one, the value of transactions is less. So you cannot use only a rule-based threshold, because if you put a lower threshold rule, you will be inundated with a lot of false positives. That will not work. So you will also need to look at behavioral analysis. You will have to look at various solutions like studying the pattern, whether the same device ID is being used, which location is being used. So, there are a lot of enablers which are required to be built in this process. So this makes it all the time more difficult, both on the onboarding and transaction monitoring. So to put it in a nutshell, the need of the hour is to do more than just KYC identification. The need of the hour is to build strong onboarding checks with proportionate onboarding controls. So today, we came across some accounts where customers have opened online. They are staying in one location, but the account is being opened in a very far off location. So you should have a system when the customer is trying to open the account. It will give you the option to choose from the nearby branches, and he should not be able to choose a very far away branch. So these are some things which banks should look at when they build the onboarding journey. And transaction monitoring, obviously they have to use the tools. So you have an RBI mule hunter, but again, these are all tech driven tools, but common sense cannot be replaced with technology. uh, I think one way here is that in India, when you get your suspect registry or the layer one complaints, as we call it, uh, banks can do a back check. So you should look at your systems and you should try to identify whether this account, which has now been confirmed as a mule account because it has got reported and confirmed on the portal, have you got any red flags in your system? So whether there were red flags like an alien notice coming on the account, were there red flags like a returned deliverable or a checkbook which has bounced back, whether there have been frequent changes in mobile email IDs, whether KYC has been completed correctly, whether you have got a transaction monitoring alert. So the point is, do a back check of your system, see how your processes are working, and try to identify the gaps. I think this is a way you can adopt till you get the technology, but it can't replace common sense.
Right. Thanks, Farooq. I think you hit the nail on the head. I mean, you have to combine common sense with your processes and technology, and only then you can possibly have see some light at the end of the tunnel. But Jonathan, coming back to you, again, you interact with many banks globally. When it comes to the gaps in existing traditional transaction monitoring systems to detect mule networks or scam linked activity, uh, what would you say are the gaps, and what is your advice to institutions to actually address these gaps?
Right. I think this is a great question again, Sirish. One of the biggest rude awakenings for me was not very long ago. I was speaking to a bank. This was, I think, less than about 8 months ago. They were using a fraud system where the core banking team had one instance of the fraud system, whereas the loan management team and the credit card team and the customer onboarding team had different systems. So now you have a same bank which is using the same fraud system, but different instances where they're not talking to each other. So I think that just defeats the purpose in even having a fraud system, because your fraudsters are not going to, say that, oh, there are rules, we will follow these rules while doing a crime. They don't follow rules, right? So obviously they are doing cross-channel frauds, like for example, money mules. You have money coming in from one account, it moves into another account, and then maybe it is, you use a ATM card to withdraw the cash from an ATM from a different location, right? So having a single platform that is bringing data in from all source systems and all channels onto a single platform, and having the entire fraud risk team having a single view is imperative. It's not a desired wish list, but it is actually imperative. I mean, anything that needs to be looked at from a fraud perspective, having a unified system that is looking at all channels, not only internally, but also externally, like Mr. Farooq touched upon dots, and the third party government agency which is giving you data. So are you bringing that data in and ingesting that data into your system so that you have not only an internal view, but an external third party information point of view as well. So that is the biggest challenge that I see these days, that banks are having disparate systems, which I think should be addressed immediately. And the other aspect that I think is very, very important is having a proper platform which is looking at employee fraud, because employees are most often involved in most of the frauds. I think some statistic I read recently where about 70 to 80% of frauds, there is most often a employee of the bank who's involved in it. I won't take names. Just earlier this week, a very large bank in the South Asia region was identified a fraud where there was an employee who had used mule accounts to move money out, and he was using a telephone shop which was literally 100 yards from where the bank's head office is, and he actually pulled out $41 million. $41 million, and the bank had no clue, which is very, very, very surprising, because having a platform that is looking at what is it that your employees are doing, what time are employees logging into the system, what time is the employee logging out, what kind of changes is the employee making, that becomes very imperative for banks to identify fraud as well, because most often employees are involved in frauds. Then static thresholds, that is archaic now. Static thresholds does not work, because your fraudsters know that okay, this is the threshold, let me play below the threshold or little above the threshold, or try and figure out how do I maneuver through this. So having a system in place that has a hybrid model of using static rules along with having an AI capability or an agent, or maybe a real-time expression parser sitting on top of a static rule, that is one looking at static behavior as well as looking at behavior which is deviating from what that particular rule is looking at. And not only single rule, having multiple rules working together. If A, then B, then C, then I want a rule to get flagged. So having a mechanism like this in your transaction monitoring system becomes extremely imperative. And plain vanilla rules is gone. Though the days of plain vanilla rules are gone. And finally, I can't stress enough on false positives, because as much as you want to stop the bad guys, as much as you want to stop the criminals and the fraudsters, you don't want to inconvenience your good guys. You don't want to inconvenience the customers that are actually doing genuine transactions. So having a false positive management system which is looking at the bad guys, at the same time understanding who the good guys are, and having that that good seesaw going on between these two, becomes extremely imperative. I mean, I can keep going on of what are the different types of gaps that we look at, and what are the different kinds of technology that can be leveraged. But at the end of the day, like Mr. Farooq said, common sense cannot be, I think, taken over by AI. Common sense becomes very key. So having a team that is equipped to actually understand and look at fraud and say, okay, this is a fraud and has to be stopped or investigated. And the sad part is always there is that first customer who's the guinea pig and the scapegoat, based off of which your transaction monitoring system learns. So it's unfortunate. I mean, if the first time that individual or that entity is defrauded, it's unfortunate, but that also becomes a learning platform for banks to bring that into the TM system and use that to continue monitoring. So these are my few thoughts on what the gaps are.
Thanks, John, for that. And I'm mindful that we have a number of questions that have come in from the audience. So let me just ask one more question to Julian and Farooq very quickly, and then let's take some of the questions from the audience. So there's a lot of talk about collaboration, industry collaboration and information sharing these days, and I think a lot of that has been found to be very useful. So, Julian, from your perspective, I mean, where do you see opportunities for stronger collaboration between traditional banks and WASPs in addressing fraud and mule account activity? And after that, Farooq, from your experience, what role do you think that industry collaboration and information sharing play in tackling fraud? And are there any specific gaps that you think that need to be addressed for this collaboration to really work? So, Julian, if I can have you first quickly on that.
Yeah, thanks, Shrish. I mean, I think there is still a lot of work to go, and conversations like this are really helpful. To kind of bring the two industries together, and I think that is happening naturally. There is a desire for us to tackle fraud within the virtual assets ecosystem, in particular, but also then outside of that as well, not to be a party to that transaction. I think there are some good public-private partnership models that are occurring. Project Cosmic in Singapore, in particular, as an example, where you're seeing banks now being able to share suspicious activity between one another, etc. The expansion of that outside of the banks to bring other ecosystem participants into it, so VASPs into that, would be really helpful. So then we can get more real-time sharing, whether it's in partial sharing, then it's still actionable intelligence that we can work on. Similarly, we've seen out of the UAE a Secure Communities Forum, where it's trying to bring together law enforcement, regulators, virtual assets, banks, etc., together to share either informally or formally between one another to kind of take action quickly on large-scale frauds in particular, and also share learnings and understandings of what they're observing. So I think that's really critical. And also just the general private-to-private information sharing between banks and VASPs, right? And so if a bank is banking a VASP, then being able to work together closely, have those fraud teams have direct contact with each other to be able to discuss and take action quickly on networks of actors that they're observing. Because a lot of this is around disruption. We're not going to stop the actors, but if we can disrupt them to a point, then it becomes less attractive for them. Through that cooperation, then that becomes really effective. And then we see that network effect expanding over time. I mean, this is a topic that everyone is challenged with, though, to be quite honest, because we run into privacy constraints, data sharing constraints, cross-border constraints, etc. I think the VASP industry has embraced, many of the members of the VASP industry embrace working with law enforcement across the globe. So having a strong willingness to accept requests for information, to act on those requests, etc., and to work closely with law enforcement is also a key element from where we sit in particular.
Thanks, Julian. Farooq, if I may have your comments on industry collaboration.
Yeah. So I agree with Julian's points, because it is eventually, see, when we are fighting an invisible enemy, we need to collaborate. And so in addition to the public-private partnerships, etc., in India, a lot of initiatives have happened at the government level. So you have your Ministry of Home Affairs, which has created the NCRP, National Cybercrime Reporting Portal, and the I4C, which are the nodal agencies, so as to say, in working against these cyber-enabled frauds. You also have digital intelligence platform, which is a DOT initiative, Department of Telecommunications, where real-time information sharing occurs between banks, the telecom service providers, the LEAs, the payment aggregators. You have a CFMC, Cyber Fraud Mitigation Center, within the I4C, where whenever there is a complaint made by a public member of being defrauded, immediately there is a tracking of that complaint, and banks are intimated, and banks are required to revert immediately where the money is, whether they can hold the money or whether they can trace the money. So all these efforts are collaborative efforts. I think the gaps, so these have been partially successful in my personal view, because ultimately the cyber fraud has increased and it's become a menace actually right now. So while these efforts are laudable and it has resulted in some success, I think if I look at gaps, I think two, three things can be done. One is we clearly need an explicit mule offense legislation. So while we work under PMLA, etc., there are certain countries like UK and Australia which have specifically created money mule offense. They recognize it as a separate offense. So we need more of this in India. I think one of the questions, I was reading some questions in the panel. One question was on the mule registry. I think that is bang on because yesterday in one of the workshops in Delhi, I think uh, this has been communicated that a mule registry will also be created. So just as you have a central fraud registry where banks are encouraged to use that online search and try to improve their fraud risk management systems, a mule registry is very much required because today, as per RBI master directions for fraud risk management, if a fraud is confirmed, there is a punitive measure of 5 years from the time that loan has been repaid by the fraudster. They cannot get another loan in the system. So there is a cooling period of 5 years. But you look at a parallel in the money mule, these guys just disappear and they go in some other bank which is weak, which doesn't have the controls. So they exploit the system. So somewhere we need to, have some punitive measures where we are able to, put some more controls and prevent them from abusing the system further. So while you have your MNRL and fraud risk indicators which are being developed and used by banks, I think not all banks are online fully. But this legislation may help in some way. So I think these are some gaps which can be looked at, specifically legislation and some punitive measures on the confirmed mule so that they don't hop over from one bank to another. Can I
Right.
just
Thanks.
take a
Thanks,
break
Farooq.
for,
Yeah,
yeah,
sure.
can I, in the interest of time, I think one of the questions I saw, which I really liked in the panel is that if there is a authorized online payment transaction by the customer, how does a bank, prevent social engineering techniques? How do we know whether that transaction which has got initiated is actually a genuine transaction or the customer has got defrauded or scammed? So I think that was the question. So here I think while online payments are like your vehicles to move away the fraud money quickly, which is being done, I think banks can introduce certain checks and controls in these online payments, which many banks have done. So, for example, simple cases are where you have a large value transaction moving online at a very odd hour, let's say after midnight. You can have a control on that. You can either hold the transaction by way of a daily limit, or you can ask for additional security checks. Secondly, if a new payee has got added, and suddenly it is followed by a transaction to transfer money, a warning pop-up message can be thrown up warning the customer whether he is not falling prey to any of the social engineering tactics. uh, or it can also have a compulsory cooling period, which many banks have. So when you register a pay immediately within 24 hours, you cannot transfer, or you can transfer a small amount only. Plus, you can have certain controls where certain locations or IPs are used, where you can build in more safeguards. So I think awareness campaigns can be run by banks and institutions, especially on the typologies which are prevalent. So there are ways in which these controls can be built on the online payments. So we can at least try to safeguard to the extent we can. I think that's it. Yeah.
Right. Thanks. Thanks so much, Farooq. In fact, the meeting that you mentioned that happened in Delhi, where this mule registry was discussed. I was there at that, and we were thinking that for PEPs we used to have that saying first. Once a PEP, always a PEP. Although that has changed in certain areas now, and it's more of a risk-based approach. Should we have once a mule, always a mule? But then what if the person is an unwitting mule, right? How long do you penalize that unwitting mule from financial services? So anyway, let me now open it up for question and answers. There are a lot of questions which have come in. Let me try and pick one or two so that you can answer, which might appeal to the larger audience. And before I do that, let me also make a quick announcement that, we will be having an in-person workshop on fraud typologies over 2 days in Bangkok on June 11th and 12th. Again, any of the ABA members who are attending today get a discount for that. You can see our website, and there's also a link that is being shared in chat. We have limited seats, just 40 seats for that workshop in person, Bangkok, June 11th, 12th. So if any of you want to explore this area in more detail with some good resource persons that we're getting over the 2 days, please do register in time, and we'll obviously send a communication later in writing to all of you also. So there's one question which is from the audience. I think it's from Vietnam. And this follows up on a point which you just mentioned, Farooq, what should banks or institutions do to maybe educate their customers better? So, this question asks, what is the most common misconception that customers have that scammers exploit? And how should institutions counter that misconception better? So maybe if you want to share some examples, some more examples, Farooq, and maybe Julian also from the VASP side, that how are you educating your customers on, how not to fall prey to these scammers?
Yeah. So I think it's a very good and relevant question. So I talked about the vulnerable segment. So while this can happen with anyone, I think banks and institutions can apply a risk-based approach when they go for awareness campaigns. And these awareness campaigns are happening. So today, I don't know in Asia, I'm sure there are, but when you go in India, if you watch a movie, you have, before the movie starts, you have something, public awareness. There are a lot of initiatives taken to educate the customers about digital arrest and investment scams. So, the idea is, as rightly asked in the question, how do we make this awareness done? So I think the first thing what we need to do is reach out to the right segment. So if banks can identify these segments, so I talked about senior citizens, I talked about students, homemakers, and low-income groups. I think this is where the risk is the highest because these guys are not digitally literate. Sorry. So primarily, they are not having the knowledge to identify what is a fraud. And as I said, the grounds of creating this is to exploit the human emotions of fear, greed, and emergency. So I think on the NCRP portal, if any one of our participant goes, you will actually see videos, just 1 minute, 2 minute videos, and they are on the spot. And these are very good initiatives. So you can even replicate those few videos. And there is also a Chacha Chaudhary comic book, which I think now we are allowed to share with customers. So, there is no, one solution for this. But clearly, the effort is to reach out and spread awareness. And how many of the audience know that today, how many mobile numbers are registered in your own name? So there is a Sanchar Sathi app where you can go and you can give your Aadhaar number and you will know how many mobile numbers are registered in your own name. So sometimes, people find that there are some mobile numbers on their Aadhaar which they are not aware of. So there are a lot of initiatives, tools which have been offered by the government. They are taking a lot of efforts. But I think the awareness campaign is also something we should look at. And it will start from visiting these portals, looking at your database, analyze where your mule activity is concentrated. Are you finding it in particular locations? Are you finding it in particular channels? Are you finding it in particular segments? So target awareness campaigns first in those areas. I think so. As I said, a risk-based approach, and no one is perfect. We should, educate people, and that is the best we can do. And of course, use technology and common sense to, fight against this menace.
Right. Thanks, Farooq. Julian, any thoughts on, customer awareness?
Yeah, Farooq really covers off some good ones there. I think for us, it's on a very practical level. We from a transaction monitoring perspective, trying to actively protect customers from being exposed to scams themselves. So whether that's prevention of a payment, whether that's holding a payment, whether that's reconfirmation of a payment, etc., to make sure that are they the ones that genuinely initiating it? If they are the ones initiating it, are they doing it in good faith? Do they know who the counterparty is on the other side they're involved in? And then taking measures within products that we're offering to ensure those products aren't then abused, or there is a way to kind of monitor within that abuse. So there are those kind of practical controls, but then it's outreach to those vulnerable communities, especially to highlight to them. But I'll just say that, in Singapore, they've taken a much broader national level education. There's a really coordinated approach being taken by the government and the banks to really actively educate customers that not only could they be a victim themselves, but they could then be, unwittingly participating in the scams themselves. So it's needed both at an individual, institutional level, and then a broader industry level and government level as well. There is one last question just about countries cooperating with each other to prevent and detect scams. And we really are seeing a lot more cooperation now. I know the UNODC in particular have dedicated forums that are focused on Southeast Asia scams and how is the coordination across countries. So there's a lot more coordination now happening, and it is a top priority, particularly in Southeast Asia, but now expanding into other countries, tackling just the prevalence of scams more broadly.
Right. Thanks so much, Julian. And I think we're at the end of time. We're exactly an hour into the webinar. So, and I know we've got a huge number of questions still to go, but we'll never get to the end of them. We will try and circulate these with our speakers, and if they do have time to respond to some, we'll try and get you some answers. But with that, thanks so much to all the participants for joining the webinar today. We hope you found it useful. Feel free to connect with our panelists over LinkedIn. I think we've shared their LinkedIn profiles in chat. If not, it's there on the webinar webpage, and you can always reach out to them offline through LinkedIn and ask them whatever questions you have, and they will answer at their convenience. Farooq, Jonathan, and Julian, thank you so much for taking the time and effort to be here with us today and to share your thoughts and insights with so many people from across the world. It's truly appreciated, and we are grateful for your support. With that, let's bring this webinar to a close. Thank you so much to the Asian Bankers Association as well for supporting us at this webinar. And we look forward to the next fraud workshop in Bangkok in early June. With that, everyone have a good day and stay safe.
Thank you. Bye.
Thanks so much, Trish. Thank you.
Bye.